Hello everybody, I'm Chris Davenport with Today Lending. Today I want to discuss a little bit about FHA financing. This is not only a first-time homebuyer program anymore. In today's lending environment, it is really starting to become a staple and is really starting to outperform and outdo conventional financing in far as rate or terms, unless you're putting 20% down. Conventional financing, with all of the problems that Fannie Mae and Freddie Mac have had over the recent years, has really tightened up their lending requirements, and the pendulum has swung from very loose requirements, which caused a lot of the mortgage mess to begin with, to an overcorrection to where really it really isn't getting done. And even, this is 2011 and we're still finding that to be true. It's starting to ease a little bit, but it's not quite there. For the average credit score, which they say it's about 680 points out of a scale of 850, that program still puts people into an FHA program. And whenever you're purchasing a home, 3.5% down is what's required. The seller is allowed to pay up to 6% of the sales price, which basically means that you can roll in the closing cost into your financing, so that really the money that you have goes towards down payment. So for example, today it's January and you're looking at getting your tax refund in April. You can take that money and apply it directly to your down payment instead of going out all of the expenses that are normally associated with the loan, as far as closing costs or your prepaid items, which is taxes and insurance, which everybody that's first entering into the market tends to forget or doesn't assume, because this is one of the loans or types of loans that really has this, whereas if you get a credit card or a personal loan or something like that, there's really not a closing process, because there's not really, it's just a bank determination. It's not a legal process where the due diligence that's in place has expenses to you as the borrower or the buyer. FHA loans does have a mortgage insurance premium, but this basically, it's usually modest and anywhere from $80 to $100 per month. Don't confuse this with hazard insurance or homeowner's insurance. You still have to insure the property in case of catastrophe, but this insures the lender in the case that you default, or actually in this case FHA or HUD in the case that you default. And this really is what spreads the risk and allows the government to come in and insure these loans. But bottom line, 3.5% down, credit scores below or down to 620 in most circumstances. Now, you can't have outstanding judgments or collections, but it is a situation where with a reasonable credit history and a documentable credit history, many people that can't get conventional loans can get FHA loans. The rates are actually the same, or actually a little bit less than conventional financing, which makes this a great option for people when they're buying. Now, FHA also has a refinance program, so if you're looking at taking your conventional loan or even your FHA loan and refinancing to a lower rate, this still allows you to do that. The guidelines are a loan to value of 96.5% of the appraised value. In a refinance circumstance, if you're going from FHA to an FHA loan, this allows you to what's called a streamlined process. Many times you can do it without appraisals, just depending on the equity situation. So this might be a great program for you as well. But give us a call with more details. I know this isn't everything, and the handbook is really complicated, so to go into all of the details is quite impossible in such a short amount of time, and especially when it's not specific to you. Our phone number here at Today Lending, 918-582-7283.